Hello friends, a very warm welcome to my channel. In this video, we are going to analyze a company called Antony Waste, which is into solid waste management sector. So the recycling theme or the waste management theme has been into the limelight in the recent years. The government as well as the private sectors are focusing on this. All the companies are trying to be environment friendly, using products which are eco-friendly for their businesses as well. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos which I upload. And if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market. I discuss my portfolio management strategies so that you can increase your portfolio returns and get some knowledge out of it. So this will be a flow of our discussion. We'll discuss about the business model in brief. We'll look at the chart, how the stock has performed in the recent years. We'll understand the main financial parameters. We'll discuss the reasons for the rise in the stock price. We'll discuss what is the outlook of the management going forward. We'll talk about the valuations, the risk in the business, and then form an overall view on the company. So Antony Waste Handling Cell is a leading player in the solid waste management sector in India. They are into this business for more than 2 decades and they have done more than 35 projects in this industry. In terms of scale, they have the single largest waste processing plant in the entire Asia. Till now, they have gained more than 87 million green units. They have more than 2,300 vehicles to manage the entire operations. And they work with more than 23 municipal corporations. In this business, the municipal corporations are their customers. Now, when you talk about the Mumbai region, nearly 90% of the solid waste which is generated in Mumbai is handled by Antony Waste. So now you can imagine the size of their operations. They do business in about 9 states in India and more than 10,000 people work with them. So this is the entire business process what they handle. They do door-to-door collection of waste. They do transportation of waste to their sorting centers. Then they do the sorting or segregation of different waste. After the segregation, based on the type of waste, they either do landfilling, further processing, energy generation, or whatever, depending on the type of material post segregation. And whatever is the best end use possible, the material is put to task. Now, these are the different vehicles which are used in all these operations by the company. So they have a large fleet of vehicles, which is not easy for any new company to build overnight. Now, when you talk about their entire revenue, they broadly divide their business into 3 parts. The first one is collection and transportation of waste. For this also, they have separate revenue stream. Then they have processing of the waste, which is after the waste reaches the processing centers. And they have some other sources of revenue like the sweeping contracts and others. So from collection, they get about 62% of the revenue, processing about 23% and 15% from the others. It's a recently listed company post-COVID and the stock has done fairly well. It was consolidating at somewhere around 300 range, then it gave a breakout and reached to almost 900. From then onwards, because of the recent results which were not that great, the stock has taken a small dip towards 600 levels now. Now, if you're expecting a further uptick in the stock, then you have to closely monitor the results going forward as the results were not up to the mark by the company. The revenue also depicts a similar trend. In FY21, the company did a revenue of about 465 crores, which went up to almost 850 crores in FY23. But in the last couple of years, the revenue has more or less stagnated. And in the current year also, the company is not giving very high revenue targets. A similar trend you will observe in profits also. If you look at the EBITDA, they did about 115 crores in FY21. And going forward, they did about 150 crores in FY22 and 23, slightly more to about 178 crores in FY24. Margin wise, you would not be happy as an investor because the margins have gone down. Earlier, they did an EBITDA of about 25%, which has gone down to 17% in FY23, which has slightly improved to 20% at FY24 and the trailing 12 months. So more or less looking at this trend, we can assume the new normal to be 20% range. The return ratios are not very impressive as it's a asset heavy business and this asset heaviness requires them to do capex continuously every year. Now this is also leading to reduction in the free cash flows because although the company is generating operating cash flows, they are not able to generate free cash flows because they are spending on capex every year. As the company is unable to generate free cash flows, then it is leading to increase of borrowings every year and now it has reached up to 429 crores in the September month this year. So you can see a cascading effect of the shortage of funds or capex intensity of this business flowing through this journey. The promoter holding is somewhere around 46%. The customers are municipalities and sometimes they delay payments a lot. So the debtor days are somewhere around 3 to 4 months for this company. In the recent Q2 results, the results were not impressive. The sales did not show any growth and the margins in fact showed compression. So the financial track record has been kind of average for this company in the last 3-4 years is what my view is. So what is the reason for the increase in the share price in the last 3-4 years? There has been decent sales growth and there has been some re-rating in the multiple. Earlier the company was getting around 15 times the earnings, which is now trading at almost 25 times. So there has been a re-rating in the multiple because the sector came into the limelight. A lot of fund houses, they want to invest in recycling theme, and that is why there are very less options available in the listed market, and this company gets chosen, and that led to the re-rating of the stock. So this is what was happening until now. Now what is going to happen in the future? What is the outlook given by the management? They want to continue following the cluster-based approach. So they enter a state, develop more and more penetration in that state, because their operations become more efficient if they do that. Then they continuously bid for new projects. So it's a kind of a tender-based bidding, and whoever wins a long-term contract. So that is one good point about this business, that they have revenue visibility for a longer period of time. On a broad basis, the privatization is happening in the solid waste management sector. Municipalities are appointing more private players to manage their waste. There are new opportunities emerging if the waste management company uses proper techniques to segregate and process the waste. They can recycle and sell the waste. They can get EPR kind of credits. They can also generate energy from waste. The government is ready to sign advanced power offtake agreements. So they have an assurity that they can sell the power at a defined rate over a longer period of time. So all these new kind of opportunities this company wants to tap. But in spite of all this, they are giving a growth guidance of somewhere around 15% in H2, and H1 was not that great for the company. So overall, we can just see a single digit growth in FY25 compared to FY24. Now after discussing the numbers, let's look at the valuations, which are very critical for taking an investment decision. Right now the stock trades somewhere around 25 times earnings, and historically in the last 5 years, if you see the average, it has been somewhere around 15 times. Usually this business is not a very strong moated business. And in terms of growth also, the company's track record has not been that impressive. So you cannot expect this business to get a very high multiple. So the present multiple of 25 times is a very fair, in fact a little optimistic multiple for this kind of a business. Price to book times is 3x and market cap to sales is 2x, which is reasonable. And overall at these kind of valuations, you can consider the stock as fully valued. Now what are the risks of investing in this kind of a business? The biggest risk in this kind of business is the credit risk. There could be a delay, or there could be a long delay in payments from the municipality sides, as sometimes they themselves are not financially very stable. So that is the biggest risk at the time of taking up new projects and at the time of performing and collecting their revenue. Concentration risk, if they work with very less municipalities for a larger portion of business, if that municipality doesn't pay, then there's a customer concentration risk. Whenever the contracts comes for renewal, if they lose and they don't get the renewal of the contract, then the continuity in the business is lost. So continuity in contracts could be a challenge for this kind of a business. There are other such private companies bidding for these kind of businesses or trying to replace the existing contract winners whenever there is a end in the contract. So there could be competition. Taking up such an activity is easy, but performing on the ground such activities, because there is a lot of unskilled labor involved, it is very difficult. So execution is a big challenge in such businesses, and the entire business is mostly dependent on the government undertakings, which is again a very high dependency. In case there is any regulation changes or government changes, that could be a big risk for this kind of a business. So now that you've understood the business model, you've understood the financials, you've understood what are the growth prospects, you've understood what are the risks in the business, what are the valuations of the stock, what is our overall view on the company? So if you're already holding the stock, looking at the present valuations and the growth visibility in FY25, the upside looks pretty limited in the near term. And if you are somebody who can hold for a longer term, let's say for 2-3 years, then it's a different matter. You can continue to hold. But if you are somebody who's looking at from a 6 months to 1 year kind of a time frame, and you are existing shareholder of this company, then you can look at profit booking in the 52-week high kind of a range. And if you are a new investor looking at a fresh investment, then these kind of businesses cannot give you an outstanding growth. When I say outstanding, it could be about 30-40% kind of a growth in this kind of businesses is very difficult. So if you're happy with a 15-20% kind of growth over a longer period of time, then this kind of investments are suitable to you. Now talking about a fresh entry at the present valuation, they are not very attractive at 25 times. You should look to buy this stock at a much lower multiple at 20 times or below. Then you will have a chance of a good upside in such kind of a businesses. So that's my brief analysis on this company at this point of time at the current valuations. I've tried to cover all the important points in this crisp 10-minute video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention in the comment section. Even this stock was picked up from the earlier videos itself. Do join a Telegram channel by clicking the link in the description. It's a free channel. Thank you for watching and have a wonderful day.